Hello and welcome to FinTech in Focus from the London Stock Exchange in partnership with Endeavour. I'm James Monroe, and in this series I'm talking to founders about their companies, how they started them, how they grew them, and what they see as their future. So I'm delighted to say that I'm now joined by Coen Jonker, the founder of Tyme Group, which builds global digital banks. And that started in South Africa with South Africa's first 100% digital retail bank. So perhaps, Coen, you can start by telling us a bit about what you're building and why you think emerging markets are the right place to build the world's next great bank.
James, we're so lucky to be alive right now. The world is going through what I think is going to be the biggest single revolution in consumer experience and mass empowerment of people. So we run a multi-country digital bank. We're headquartered in Singapore. We built our first bank in South Africa, where we now have 12 million people. We built our second bank in the Philippines, where we now have about 10 million customers. And our passion is unleashing human potential. That is really giving people agency to take control of their own lives and not be at the mercy of the world around them by giving them the financial tools they need to participate fully in the economy. And to your question, why emerging markets? The interesting thing about emerging markets is that a lot of the services, the products, the mechanisms for participation in the economy that we take for granted here in London, those things do not exist there. So you have this opportunity that is very similar to the opportunity that we had at the advent of mobile phones, which is you're not asking people to adjust from an old system to a new system. You're actually giving them something that wasn't there before, and you can get that leapfrog effect where somebody goes straight from the cash economy into the new economy.
Most digital banks would go fully app first, but it's really interesting that Tyme built kiosks in supermarkets. I'm wondering why. What was the insight that made you think that was right for your customers? And what did you learn which you might not have learned by being purely digital?
Yes, James, that is really our party trick, is this physical channel that we created, or these digital points of representation in the physical world. The way we came upon it is we listened to our customers. Because, if you think about a mobile phone as a starting point of a banking relationship, even if you're quite sophisticated, convincing somebody to download an app and believe that your money is safe there is quite difficult. And so what we did is we used the safe environment of somebody's local retail store. We put a kiosk there where somebody could open a bank account in 3 minutes. We employed somebody from the local community to be the education agent in that store. And what that allowed was it allowed people a first stepping off point where the human physical world connected in a natural way to the digital world. And that gave us two amazing things. The first thing is that it accelerated trust. Because now, there's somebody I know from my community in an environment that I know, and the product is integrated into that environment. I can get cash at the till point. I can deposit cash at the till point in my local store. The second thing it gave us, which is a bit counterintuitive, it gave us superior unit economics. It turns out that it is more cost effective to open bank accounts in that way, even than it is to open it online, because you don't have all that cost associated with digital marketing to convince the customer to take up your product.
Interesting. And it's clearly working because you reached profitability within 5 years, which is very unusual. I mean, something less than 5% of neobanks can claim that credit. So give us the secret. What did you get right that maybe others might not have?
James, firstly, we got a lot wrong. Always in hindsight, you realize how many things you could have done better. But I think that in some ways, the blessing for a business like ours is the constraint. So, we simply didn't have the money to build things more expensively. We had to think a lot harder about what we spent money on. We had to think a lot harder about our unit economics in relation to our customer. Our objective was always to bank even the poorest person in South Africa profitably. And that is a SRD grant recipient that gets a basic income grant from government of less than $1 a day. And we said if we can bank that customer profitably, then we're running the right business. And I think it was that combination of constraints and just not having the money available that sort of helped us set the business up for long-term success.
So now you're rebranding, you're expanding, you're in the Philippines, as you say, with millions of customers there. So what does the future hold for Tyme, and how can you apply that successful South African model worldwide?
The interesting thing about a country like South Africa is that it is quite a classic emerging market. And what we see, and our data tells us, is that customers in South Africa are not that different from customers in places like Philippines, Indonesia, Vietnam, Thailand, Mexico, Colombia and all these countries. They're very similar countries, very similar needs and so on. So what I see happening with digital banking and other digital financial services is that there will be a natural spread of successful businesses across these emerging markets with, let's call it, same similar characteristics across the different markets. We also think that there is a big thing happening in retail banking. Retail banking is the largest profit pool of any industry in the world, but it has been historically domestic and fragmented. We think that is changing. We think that retail banking, with the advent of things like stablecoin and the regularization of regulations across the world, we think that there is a chance that retail banking actually is becoming increasingly a global industry and will in time become, in a way, less fragmented, in that you will see fewer winners taking more of the market's share. So I would say not a one-size-fits-all or a winner takes it all, more like fewer winners taking most. And our job is to compete at that level, to truly compete with the best internationally.
Thank you. Sounds like Tyme is on the up, and sadly, Tyme is up for us. And on behalf of the London Stock Exchange and Endeavour, it remains for me to say thank you so much for being part of FinTech in Focus. And to everyone watching, thank you as well. We'll see you next time. Goodbye.